Welcome to Vol Stars, where we talk everything markets and those who make them. Today's episode brought to you by Scott Besson's Soybean Farm. Source your soybeans from a trusted family farm owned by the most preeminent bean counter in the world. Don't settle for less than the best. Grown and distributed by Maga's Star Soy Boy. Shipped anywhere in the world. Not available in China. Ron, what do you want, Ron? I'm in the middle of the intro. What? He sold the farm? Our contract is canceled. All right, we'll have to edit this out. And finally, by GammaStrike.com, providing actual real-time data for every type of trader. You've tried the rest, and I'll try the best. GammaStrike.com. I'm JFresh, and I'm joined by our co-hosts, Gherk and Dork. Let's get to the market.
Actually, due to the cancellation of the soybean farm, the GammaStrike sponsorship is also canceled.
Brought to you by Three Dudes and Ron, whatever he is.
There we go.
What are you, Ron?
We are bringing it. So,
oh, good lord!
All right, we'll get back to we'll figure out what Ron is after the episode.
Sources familiar with the matter say he's a producer.
Yeah, I never trust those people. Why are they so familiar with things?
Yeah.
Right? Yeah. So I want to know who sources are and why are they so familiar with the matters?
I don't know, but apparently the sources familiar with the matter on the David Sachs New York Times article seem to be getting some key details wrong. Well, it's interesting to see.
Tell me more.
I mean, New York Times put out like a hit piece on David Sachs, just basically saying that he is personally gaining, he has personal financial incentives in AI and is also the AI czar, and there's all these conflicts of interest that they tried to show. But apparently there's things like he went to a dinner with Jensen Huang that he claims he didn't go to, and then the New York Times like removed it from the article. I don't know. But like all of Silicon Valley is like rallying around David Sachs because they're like, don't take away my, license to kill. Anyway.
Man, oh man.
That wasn't a topic on Ron's list, so we're not allowed to talk about it, or Ron will whip us. Topic that is on Ron's list. Dork, comply. Santa Rally, we have to talk about that again, because Ron hates joy and everything. Santa Rally's not real, but we are pushing near to an all-time high, so maybe we should discuss that. How do we feel about that?
Well,
didn't it kind of say it was probably going to happen?
Yeah. Yeah. So, as soon as we priced in a December cut of like an 80%, 90% chance of a December cut from like the low of 30%, it seemed pretty obvious that we were headed back up. However, structurally, this rally sucks.
Yeah.
And I'm not just saying that without any evidentiary support. There's no gamma that's persisted under spot. There's no delta. Where the fuck is everybody below, 1.0 moneyness?
Right below spot. You mean everyone who's kind of, no, there's not a lot.
What are they doing? I mean, bulls are taking profits. They're afraid. There's no risk premium, right? So they're afraid to sell puts.
Well, they did sell puts, but
they did sell a lot of puts initially, but now they're closing them.
Well, they also love
closing the sold puts, which is keeping volatility more elevated than it should be, given how much HV is crushed. And so we're in a weird spot, right? And we assume that we bounced back 5% after our 6% drop because the market priced back in the December rate cut after pricing it out. And that's only happened 9 or 10 times. So I know it's hard to keep track of, but no, we're sure of it this time. It's definitely happening. But if it's already priced in, what's driving the Santa rally? Like, where's the additional layer of what's happened? Did NVIDIA invest some more money into themselves?
Actually, they did just
has
invest...
Alex Karp done another 8-ball of coke and done a handstand on a microphone?
Hold on, I have to clear the air here. Just some fact checking. Jensen did recently just announce that he was investing $2 billion of his own money back into himself through Synopsys.
Ooh.
Who is a company that actually has carved out quite a little niche in the semiconductor industry in general.
Tell me they sell shit to NVIDIA, please.
They do.
Oh, he's doing
but they sell software services to
all even better. Even better than they sell something with that's not tangible.
Synopsys sells software services to basically all the chip producers. They have various software products that help with like design compliance and things like that, and doing checks to make sure that like this really complex. Well, like just to make sure that the really complex system you built doesn't have like any weird outlier. And you think about the complexity of a chip you have to design.
I have a thesis.
Billions of parts, but yeah. What's your thesis? Synopsys is kind of bullshit. I met someone who got a job there, and listening to like this person seemed unemployable to me. So
hear me out.
Job at
what if their software does nothing?
And what if it doesn't matter what it does?
And Jensen. So, I mean, the reason I said I hope that NVIDIA pays them money for a service is because it sounds like Jensen's doing the Carvana thing, where you buy the companies that receive money from the primary company so that you can get all of those revenues from the company you own. Like Carvana did with Root Insurance, where Root actually makes money per every car Carvana sells, despite Carvana eating a $13,000 loss.
I would just say, you motherfucker, you're going to make us talk about Carvana tonight, aren't you?
A little bit. But we don't have to do it right now, even though this is the perfect transition.
God damn it, Gherk.
It's too soon.
We said we weren't going to talk about it.
I'm going to club it, and we'll discuss more about how Jensen's figured out a way to embezzle NVIDIA's capex.
Yeah. So anyway, okay. So finishing the fact check, NVIDIA has found more ways to send itself its own money.
Well, no, this is different. This is Jensen sending himself NVIDIA's money.
Yeah, that's what I said.
Personally.
It's the same thing, Gherk.
No, that's not the same as NVIDIA.
They cut out. Yeah, I agree. They cut out the chips entirely.
Their own money up their ass.
Yeah, they cut out the chips entirely.
This is like some tangential like quality assurance software that nobody understands because they probably don't have like a real product deck.
That's why I said it doesn't matter what the software does.
As somebody who has
it doesn't, as long as they charge enough money per unit sold.
Yeah. As somebody who has a little bit of non-general insight into like a Synopsys and some of their competitors, one of the things that they're trying to do in AI, and I'm just speculating here that it's related to this, is there are a lot of quality assurance checks that you have to do in this really complex system. So for example, things like checking how much heat does your chip make and where is it making the heat, and is it going to get too hot, and how do you estimate that without having to, I mean, you think about the simulation space, we're talking about tens of nanometers for the smallest feature over millimeters, centimeters, right? I mean, it's just such a massive simulation. You can't do the whole thing. So they're trying to do reduced order modeling of those things. And which way might you do it? With AI. And how might you train those models with NVIDIA GPUs? So there is a possibility that Synopsys and those people need those GPUs. They might need GPUs for something, for those simulations. I have asked the people who are actually designing those systems, they're claiming, oh, you get this much of a speed up in your simulation time. I was like, well, aren't you you're doing the simulations now, and then selling the results later. So you're still spending the money, right? So it's not more efficient. You're just hiding when the computation is done and when the person is paying for it. And they're kind of like, yeah. But yeah, I mean, that's a strategy that I know that those people are taking. So that could be one reason why they might need actual GPUs. But I don't think they're in a position to actually build their own servers. I think they're probably more likely to buy it from someone like a CoreWeave, who NVIDIA is also a large owner of, or, one of the other ones. The other fact check. What was the other thing that you said? There was NVIDIA and what else?
Carvana? Wait, no, I'm not supposed to say that. Shit. No, that's not on Ron's slide deck. No.
There's something else you said. I don't even remember now. You got me all worked up talking about Jensen's Wang. All right, continue.
I don't know. So is there support underneath the market? Not really. I mean, I want to say that in terms of the all-time high discussion where this all started, and before we got totally sidetracked, the all-time high thing, I mean, there is one thing that can grind this market up for a while. And it's the same thing that stopped the market from selling off too hard on Friday, which is just 0DTE short vol. It is so huge. How can you discount it? I mean, with 0DTs, you can pretty much push the market up every day.
Well,
barring external news.
Actually, every day last week, there was a disincentive to sell 0DTs for the next day at close. Like, there was no positive carry on the 1 DTE contract. But then the next morning we would dump, the vol on those contracts would spike, and then they would get sold when the risk was reduced by the carry. However, once we bounce back up to the top of that range, price action slows way the fuck down because nobody actually wants to sell those puts.
Are you saying risk premia is finally overcrowded and underpriced?
The trade is so overcrowded, it's unbelievable, and very quickly too, which is part of the issue. Is the trade is too crowded too fast, and it's actually prevented IV from falling at a rate commensurate with how fast historic vol has fallen. So those options are staying moderately overpriced, but even at spot, the out of the money puts are still too expensive. And then when we move up, they're still kind of too expensive. So I don't know. It's created kind of a weird set of conditions where everybody's just short strangling the market into close every day as much as they feasibly can, and then one side gets squeezed out. But most of last week, it was the bulls that got squeezed out. So the flows, like those charm flows at the end of the day, still favored the bears, and we pushed into negative charm, I think, at the end of almost every day last week.
Interesting. Yeah, that's why, I like to do the thing where I bring something up and I know I'm probably going to be not accounting for everything because Gherk does account for everything and he loves being right. So I know he's going to add all the context I need. That makes total sense though, right? Like, and there's something we've noticed too. JFresh has brought this up a lot. The whole idea that they're long vol in the short term, but then they're short vol in the ultra short term, right? And I think that this does create some sort of a weird, like a tenuous diagonal that just kind of scoots forward in the market and scoots up, that I think we're seeing. And yeah, we are seeing it sort of show some weakness. These drops this last week were, even though they're intraday and, for the long-term investor, it's kind of like whatever, but these drops intraday have been pretty darn pronounced when they happen, and it's sudden, and it's just like it's on, and then all of a sudden it's off, and then boom, right back to where vol is minimalized, right? Just right there. Yeah.
Well, I mean, if you crowd the dealer long puts, eventually the dealer is gonna just, they're gonna stop adding that supportive hedge on your upside moves, or on the down ticks of your upside moves. And so, I mean, it's something we generally expect to see when the dealer book turns more concave, and the convexity of their forward returns inverses, and they start to lose money. But we're seeing it here below Vana neutral or Vega neutral because Well, because I mean, they're just so crowded into those short puts in the early part of the day, and a lot of that's also been events. Like, there's been a shitload of event vol on the 1 DTE every day, right? But no one really wants to sell that event vol until the event is passed, because the market's very. I mean, we're like, everyone knows we're pricing in a 90% chance of a rate cut without any real supportive macro data. So we're just like, the Fed's like, basically the market's agreeing that the Fed is just going to cut to ensure that they've cut. And without any basis in data. And when you're betting that on a Fed that claims to be data dependent, I'm not saying they are, but that means that every macro event, especially all this old data from the shutdown, suddenly becomes really, really important. And you've got to price the options up on that. And then once that event passes, good or bad, everyone's going to kind of want to sell the puts because there's some money in them finally. But then,
what's interesting though is I'm not really seeing them being bid up.
The puts?
Are you?
Yeah. I mean, intraday, the prices on them are rising. Definitely on those like morning dumps. Don't get me wrong, they're selling the put in the money, like when we dump, but like they'll sell the in the money puts, they'll sell the out the money puts, they'll sell the out of the money puts. Like everything gets smashed. But I mean, day to day, no. Like if you're looking at like the 10-day tenor, there's not much of a change in pricing. It's like a slow, like a kind of a slow grind down in historic vol.
Yeah, I feel like everybody is just gonna.
Flat.
I feel like everybody's literally just gonna try to hedge this event the day of the event.
Yeah, so does this mean there's going to be just a huge whipsaw of event vol that happens where it's just
That's
fucking
my guess.
Bam!
Just I know Ron wants me to talk and plug my X account. I post a weekly analysis on just how I kind of see the market overall using data from GammaStrike and just, some macro things and intuition from years of just thinking about this every day because I have a mental illness. But I was kind of looking for any evidence of like some positioning that would suggest that there could be a huge like up or down move after the Fed decision, and I just haven't really seen it, which I think kind of plays into the idea that everyone's sort of already priced in that move. So yeah, I do think what you're going to see the day of is, increased volatility as people hedge the actual hour of the event. And then just kind of the whipsaw that we saw. I don't know that we're really going to see a direction unless something unexpected happens. Like if, I don't know, maybe the decision is really contested, if it comes down to like almost a split vote, or, just the discussion kind of falls apart, if the presser is really aggressive in the questioning and Powell slips up, right? I mean, those are kind of, and maybe reveals something about the future that might not be so dovish. But barring any of that, I think we're just going to get a big old whipsaw.
Yeah, I actually, there's one thing I saw where like, I thought, well, last week, and I actually I wrote a little bit about it over on my Discord, but as we got into the end of the week, there was a big spike in like a big pop up in put leverage. But that put leverage moved like the peak of out of the money put leverage closer to spot, which is unusual. Generally speaking, when put leverage goes up in bullish conditions, you see, the peak of put leverage just rise. You don't generally see it move closer to spot, especially when day over day is flat. And then also the next day, Friday, which I just saw now, Friday put leverage fell. So not only did that peak of put risk move closer to spot, but now put leverage, like into Friday, put leverage is declining. And this is not this. I'll go more into like what I saw over on the monthly chain and the weekly chain that also seem to kind of support this idea that these bullish positions are pulling back going into the FOMC meeting. And one of those things was that, we started to see like VN move or Vega neutral move a little bit further away from spot on both chains. We saw Gamma Max rise on both chains, and the bot sold, like the Dexa was doing some weird things into the end of the week there too. So despite our bullish price action, it looked like options were being a little less bought. Gamma was falling off a little bit, and some of that short vol that had been coming in and pulling VN closer to spot as puts below spot were sold, started to pull back. And so, I mean, to me, that kind of looks like a little bit of deleveraging, but it's hard to tell. Like none of it's enough deleveraging to be like, oh, people are bailing. But it's definitely, there's some uncertainty going into this Fed meeting, and I'm pretty sure it's about where equities are relative to their historic levels, because I really don't think anything coming out of the Fed meeting is going to change anything. Like if we've got I was saying this earlier, if we've got that rate cut priced in, there's really not a lot of upside room for growth. I mean, there's nothing. There's no narrative right now that's promising a lot of growth beyond what's priced in. And if the Fed, sorry,
go ahead. No.
Well, if and so I think then we fall back to like, this meeting's just about the dot plot, and it's about quantitative tightening, right? So we moved out of tightening into like this like quasi rollover type environment. And Powell promised that that's going to continue for some time, but because of the SOFR IORB spread that we've been kind of seeing get blown out when cash demand is high, you're starting to see a lot of news articles pushing the Fed towards some kind of QE decision, where the Fed's going to come in and support that illiquidity at the front end and start buying up those treasury bills. But if the Fed doesn't, that problem is going to persist, and that would be even worsened by a Fed cut. And so I think the path of cuts moving forward is going to be really important. And I think whether or not the Fed does QE is going to be really important. If they do QE, I see that as being like short-term bullish, but I think it's absolutely going to drive rates at the long end up. And
do you know what they could do to assuage some of that pressure on the SOFR IORB spread? Term out the debt.
You mean make the Fed buy their debt?
Well, no. It would be sell duration.
No, you don't do that, JFresh. You don't do that unless the Fed's buying it. You don't do that.
Then instead of blowing up the overnight rate, they're going to blow out the rate that everybody's hoping will go down so they can get a mortgage to buy a house that they can't afford.
Yep. Or a car loan for less than $700.
Yeah.
At this point, car loans are like, they're getting up to like, what are they at now? Like 6 years? 8 years?
Here's what everybody wants to know.
I think 7's becoming a lot more.
Now, I think I've seen some 8. Here's what everybody wants to know. Are we touching 6,900 this week?
I mean, it's so close to spot. I don't see why
we probably will. Yeah.
I kind of agree. It's definitely on the table. I think everything that I've seen.
I do think we can get like a pullback in the early part of this week, I guess, just based on positioning, but I don't see a reason we can't tap 6,900 first.
Yeah, I see room for us to even just drift there, even if just in the lack of an actual event of any kind, right? I mean, there's just kind of an opening there, but once we get to 6,900, there's a lot of sold positions up there.
Dude, and it's so much fucking gamma there.
it's going to be really hard to push up. And you have to think too, a lot of this stuff is December OPEX and it is end of month on December. Those positions have been accruing for many, many months over the course of this year, and they're unlikely to be positions that are going to be really wishy-washy and just like, this first sign of something. So I do think that it will be very difficult to push up beyond 6,900 this week, or even just really this year. But we'll see how positioning looks, obviously, as time goes on. It's hard to say. But we're running out of time. And so, yeah, that's kind of what I see. And then again, on the other side, you've got all these supportive sold puts that are just kind of hanging out, hoping that it's enough to hobble us into the end of the year, out of the money, right? And we'll kind of see where it goes. All right, so we've already kind of talked a lot about the Fed's interest rate cut in bonds. We haven't talked about Japan. Anything with Japan other than we got the date wrong on that last week too? We'll talk about that during Stupid Bets, but that's this week too, right? Or are we getting that wrong
next
again?
week. That's
next week. Okay.
Yeah. Japan's next week, and then the Fed's this week. Usually they're roughly around the same time, but the economic calendar I was looking at was wrong. Regardless of that, I mean, the Japan 10-year bond, let me see where it's at right now.
Is it still just going straight up?
Yeah, I mean, it was. I just want to see if the rate cut announcement had any kind of effect. Looks like, looks like still just straight rocketing. So yeah, the Japan 10-year at 1.95 now.
Woo!
Good God.
That's spicy.
Yeah, it is. It is up. Let's see, since April.
Damn.
It is up about 86%. And
so one of the topics on FinTwit that's kind of been starting to build as a discussion point is that the yen carry trade actually isn't really that big, and you're overblowing it, and it's a nothing burger. Thoughts?
The yen carry trade's back on social media. Woo!
Yeah, I mean, I've been tracking the leverage on the yen carry for about 3 years now, pretty actively.
No, longer than that.
Every single day.
It's been a while.
It's been 3 years. I think it was end of 2022 when I first started, right when the impacts from the FX market on Japan, like pulling back intervention, were so pronounced. And I was like, oh my God, I wonder if everybody's just getting a bunch of free money from Japan like they did back in 2008. So yeah, they are. And the Japan carry trade as of this morning is, I think it hit, we got a brand new all-time high on that leverage on the weekly. The prior was 9.4x. Current leverage 9.43 as of market open tonight. So that's exciting. And leverage at the front end of that trade is still pretty elevated. So both in the short end and the long end, obviously way more in the long end because that's where the spread is most beneficial. But that spread's closing regardless of what policymakers are doing. The bond market is closing it. They're pushing up those bonds very, very quickly. And I mean, the Japan 10-year at 2%, but then, Japan 20-year at 2.94%. And that one's up a solid
Is it time for me to get a mortgage in Japan? It might be. Because the dollar is just so powerful compared to the yen right now. It's insane. And these rates, they seem
time
shitty,
to buy a house for cash in Japan.
That's what I mean. Oh, yeah, okay, yeah. Big fat down payment.
And the Japan 30-year bond at 3.38%. Now, this is a country that's historically issued, debt against their GDP significantly in excess of their GDP. So their ratio, like their debt to GDP ratio, is fucking terrible. Like it's like 122% of their GDP or something crazy.
Well, haven't you heard, Gherk, the new Keynesians say that doesn't matter?
Well, currently their payment on that debt is about 0.5% of their GDP because their rates have largely been zero, which has been really nice, right? You can issue as much debt as you want with a negative rate or, you know, a 0% rate. But when your interest payments, especially on that short-term debt, are so high, that starts to become a really big problem unless you raise rates significantly.
Or you do something else, because they have a lot of something that is kind of important to bring up. They have a lot of this thing. It's called U.S. Treasuries. They have a lot of those things, and if they're going to be doing that, they may need to.
That's yeah.
You know what this reminds me of? This reminds me of Saylor with Bitcoin, with his fucking with his MicroStrategy shit, right? If it goes below MNAV, you know what he's got to do. It kind of reminds me, it's a similar situation. At some point, to pay their, instead of a dividend, it's their interest payments. I don't know.
I mean, it's more than that, right? It's not that it's like an immediate crisis, I guess, in the sense that like something's broken.
It's a stressor.
In the system. No, it's more than that. It's this idea that for 30, 40 years, the entire global economy, every insurance company, every mutual fund, every bank, every hedge fund has operated in a situation where the price of money, the cost of capital, has been severely distorted by Japanese deflation. And so capital for the last 40 years has been abundant and, more importantly, really fucking cheap. And that's because the Japanese, were trapped in that psychology, and they were willing to export their savings for nothing in return. But now, with these bonds moving up, that changes the paradigm that every portfolio in the world is built on. The price of capital is now going to be costly.
I want to point out that it's a fairly significant change.
Yeah, this it's not small, but it's also not like a liquidity crisis or something.
Yeah.
But it is going to significantly change the way capital and risk assets are viewed worldwide. Because now that distortion's unwinding, right? And the rate at which people are going to voluntarily defer consumption and take on risk is going to shift.
It almost seems like people are actually going to have to start producing things in order to get more money from the banks.
Yeah.
Yeah, I mean,
credit will be risky.
Credit is going to be risky. Yeah. Money is no longer going to be free, and the quality of investments is going to matter again. And this is something that we've all discussed, being, bearish over the years, as we are several times. Is like, why are these companies that really are just selling pipe dreams being valued at 50x, 100x, 200x, 300x their forward earnings? Why is this speculated? And this is possible because capital is so cheap. Why not risk it?
Because of federal
it's
reserves.
The Y Combinator theory, right? It's the private. It's this bleed out of private equity's idea that you buy one of everything, and if one of them 1 million X's or whatever, then you win. And that's it's worked okay.
The federal reserves across the globe have been successful at creating a system where everybody can become a rentier.
Yeah, they've created a system that's characterized by negative rates and massively reduced risk premium, right? And then, you know, that creates the whole ideology behind the Fed put. The Fed put that is, you know, perpetually suppressed volatility in the markets. And so I think this is legitimately like the dawn of a new era. This is the beginning of an era in which the cost of capital matters, volatility is real, and there is significant risk in the pricing of assets.
Yeah, I would agree with that we're entering a new regime. You know, one of the ways I like to think about, especially looking at Japan and some other economies, like Japan financially and China from a, you know, manufacturing and labor standpoint, the Western world has been able to export their inflation from their monetary debasement for decades, for a long time.
Yeah,
and
since
that
the
window
90s.
is being shut. You know, one thing that I would like to note is that after, you know, 2021-ish time period when we had really high inflation, right? Their inflation actually started climbing a little bit later, but they're now sitting at, you know, healthy 2 years now of 3% inflation.
Japan?
Yeah.
Yeah. There's real risk there for them, though.
I wish, and so, you know, that window to export inflation to Japan is closing. We've closed a lot of the window to export inflation to China through just stupid tariff shit. But it is an important indication that we're closing all of these windows that are allowing us to export our inflation. And so we're at a time now where inflation is sticky. And I would argue that even though the labor market is falling apart, that inflation is going to be a problem throughout this time. I don't think it's going to stop the Fed from giving it one more college try and just,
they're going to cut into stagflation. Is that what you're saying?
Well, I think
at some point, they'll try QE, and that will be potentially the end of the Federal Reserve. When that
QE into stagflation, let's fucking go.
Yeah,
I want a free house.
Yeah, well, I mean, with all the boomers dying, you'll get one anyway. You just have to wait
just be giving me houses.
More years. But no, I mean, JFresh is right. This is the first time in 40 fucking years that we have seen like fixed income carry a real, like, from now forward, fixed income will carry like a real risk of loss and not just opportunity cost. And that changes. I can't go over enough how much that changes just everything. I know that it's a really complex system and it's hard for probably a lot of people listening to understand. But this means that leverage, previously risk-free, and speculation, previously risk-free, now carry a significant amount of risk.
Which is healthy. And I think that this is
it is.
I think that the risk-free nature of it and the Ponzi type mechanics that have arisen from it over the last few years.
MSTR.
Sorry. Full circle, baby. Full circle.
I think it makes people uneasy because I think we all feel that you shouldn't just be able to speculate your way into excess, right? I mean, there should be risk. And we've all seen Wall Street Bets. We know that there are people that are blowing up every day, you know, grandma's inheritance. But, you know, there shouldn't be This is not how markets used to feel, I guess is the way to say it. Like, markets used to be like, hey, if I get into this, I could lose everything. But now it's just become like, if you're not in it, you're a dipshit. Like, get
You're
in
talking
there
about the
and
Mad Money
gamble.
portfolio of the top 10 stocks in the S&P 500.
That was, and you know what's so funny is this is coming such a short time after people really started to feel, as a whole, you know, as an entire country, the events of 1920 were so pronounced that our great grandparents warned our grandparents to stay the fuck away from the market. And our grandparents warned our parents to stay the fuck away from the market. And our parents warned us that it was kind of just gambling, maybe risky. Sometimes you can make some money off it.
It slowly shifted from like the market is gambling to the point where it's like all of a sudden these retirement accounts came out. Then 2008 happened, and it's like, be careful where you put your retirement account. But it's back to now we're just, if you passively invest.
I would say I was pretty early on the swing upward the other way. Like the advice that I got from a very, very, very young age was get in and get ready to sit and let your compound interest accrue, you know, and it was just kind of like a 7% a year kind of thing. Yeah, there's gonna be a lot of volatility, but as long as you have a long time frame, and I think there's still a lot of that here now, but I think
markets have become much more speculative.
Well, the fact that we're getting like multiple, the fact that the market can go up like 50% in 2 years, and nobody bats an eye. Everyone's just like, "Oh yeah, this is healthy and normal."
No, I mean,
yeah, it's not. It's not realistic.
Part of that is the way you know, but we are, and it's so sad that we're finally at a point where people feel like they have the ability to speculate. You know, we've got Robinhood and we've got all these platforms, Webull, and we have people trading actively, millions of
more
them
than ever.
Day. More than ever.
By size, multiples more than ever.
And people gambling and people winning and people feeling good about winning, and that's because, you know, stocks have been going up. But, you know, when a market where you can buy anything and it will go up shifts to a market where stock picking becomes excruciatingly important, the public at large gets very, very frightened of the markets very quickly.
Well, yeah, everybody buying stocks on margin, just all of a sudden they get terrified, because you can imagine, like, you buy a stock and it goes down 10% and it wipes out half your margin. Like, it's a terrible, terrible prospect.
And so, I mean, we're getting really close to that. And the next Fed cut and Japan hike, if that's how this plays out, that's gonna impact that drastically. And you know, that's trillions in US treasuries that are gonna need to be reshored because domestic yields are higher. And there's no reason to have that money abroad making nothing anymore. The cost of all that margin those banks are using and all those spreads are gonna close. And it's going to drive risk assets down. I mean, you know, I learned all of the gram and, you know, everything you're supposed to read, and Intelligent Investor, and, you know, you read that and you think about it really hard and you think, now we live in a world where fake money commands, you know, $90,000 a unit. And you think to yourself,
are you referring to the Bitcoin,
I'm not going to say what
or are you referring to the Zeptosat? How many Zeptosats will there ever be? Are we going to run out of Zeptosats?
I don't need to point at anyone specifically.
I'm just trying to bring a little comedic brevity here, because you're getting a little thick and heavy. I didn't realize we were going to have a church sermon here tonight on Sunday night.
Sorry, but yeah, you got me going. You know what was going to happen the second you bring up Japan with me.
I know you.
Honestly, though, like,
what's the name for like,
weeb?
Like,
like a financial weeb?
He's an otaku. Okay, he's a financial otaku.
I'm thinking of like, what is the analogous term for like an Anglophile?
White guy?
No. An Anglophile is somebody who's like obsessed with the UK.
I don't know.
Japanophile?
I think so.
I'm
not. They just play a huge role in international banking, and nobody pays attention. They play a huge
role in your anime collection.
Yeah, I don't even watch anime.
How many mechatronic models do you
Japanese
have?
Food.
How many mecha models do you have in your?
Well, it's like the JFresh. That's like saying, man, I got to pay taxes. Like, oh, you love the government, don't you?
You know how many waifus I have? One less than you.
So like, actually, no. That wallet was discontinued. That is gone forever.
Oh, I'm so sorry. You lost your NFT waifu? Yeah. How are you going to financially recover?
I don't know.
He worked for 3 days.
Speaks to the problem and risk assets. The fact that you have a screenshot that's worth any amount of money is...
It's probably not anymore. It's probably worthless. It was worthless when he got it.
No, it was worth like 30 cents. I remember.
Oh, yeah.
Yeah, it wasn't much. Okay.
So yeah, I think just to put it in perspective,
though, we'll move on.
Okay, yeah, just put it in perspective. I mean, I know this is, if you check off your bingo card, Volstars talks about fucking carry trade, but like this thing is so pervasive that, if you've got a car loan or a mortgage or even a credit card application in the past, I don't know, 30 years.
If you're looking
you've been a participant. Yeah. You've been a participant in this big giant, whole fucking circle of shit. So it matters. And going forward, right, as this sort of carry trade slowly closes shut, what's going to happen is that, lending people money is going to start getting more competitive, and lenders are going to start getting way more discerning about who they give money to.
Everyone, something I see all the time on X and like YouTube is like, when the real estate market comes down, if it ever does, I'm going to buy the fuck out of that dip. And I'm going to tell everybody something right now about what happens when the real estate market comes down. Nobody's going to lend you any fucking money to buy that dip. Yeah. So you better have a big fucking fat pile of cash, and that cash better still be worth something. Otherwise, you're just going to sit on it. Because that was my
refi strategy. Like, I think about refinancing all the time, and I'm like, man, when the time comes to refinance, I'm probably not going to be able to refinance because the banks are going to tell me to fuck myself.
Yeah. Unless you qualify for a 0.85% interest 50-year loan on your assets, you're not getting a fucking 30-year mortgage.
So basically, if I'm like a multi-millionaire
house.
Yeah.
All right. Yeah. Speaking of prices, and we talked a little bit about exporting inflation to other countries, but we got PCE this week. It was delayed, right? It was for September, but do you think this will factor in? Well, first, before we do that, let's play the PCE game, which I just made up.
Oh.
Let's not look at, trying to find like real versus nominal. Let's just look at changes in monthly consumer spending in aggregate.
Uh-huh.
What do you think was the highest category? Both of you have to pick.
Healthcare.
It's a good guess.
Yeah. Wait, can I? Old people.
You can't guess the same thing, Gherk.
Oh shit.
Old people healthcare. Then he can pick healthcare.
No. You get whole health. You get the health.
Okay, fine. Healthcare.
They don't break it out that much.
God damn it. Okay, healthcare.
Non-durables.
Ooh, interesting. That'll be a little hard to break out the chart I'm looking at. Healthcare was actually the third highest.
Damn it.
12.6%.
I lose.
Increase. This is monthly
12.6. Jesus Christ.
The only two categories that beat it out were housing and utilities, 15.4%. And gasoline and other energy goods, 17.2%.
Well, but that's food and energy, bro. That doesn't count, bro. No food and energy, bro.
Food, energy, and healthcare, yeah. Financial services up 12%. Food services and accommodations up 8%. Transportation 6%. Other services 5.8%. Other non-durable goods 3.8%. Final expenditures of that doesn't matter. Furnishings and durable household equipment 0.6%. Nobody's buying any furniture. or durables.
Look, if you don't need, if you need it to not die, we should just exclude it from inflation.
Recreational goods and vehicles minus 6.3%, motor vehicles and parts minus 7.4%.
That's actually interesting. The recreational vehicle
other
being
durable
down that
goods
much,
minus 1.9, recreational services minus 0.7, clothing and footwear minus 3.8. So yeah, we kind of have this, and again, this isn't inflation. This is just how much spending. I do like to look at these kinds of metrics because it sort of disentangles all the games you have to play to figure out what's real and what's productivity.
Actually, the recreational one, it's the seasonal adjustment on that because we're heading into winter, so I don't know.
I believe these are yeah, these are seasonally adjusted rates.
Okay. Well, in that case, then it's interesting.
I'm not really sure where to find the non-seasonally adjusted PCE. The CPI, they present that, but straight.
Okay.
So yeah, so we have kind of an interesting situation where and if you look at the headline numbers, what 2.8, 2.6, 3.
These aren't good, right?
No.
So yeah, the recreational one tells you basically people aren't buying RVs.
Are we not in 2025? Wasn't this the long run that we got back in the dot plots when they first started raising rates? And now we're still sitting here and inflation's still fucking going up, right? I mean, CPI is still positively, it was 0.3. It's still going up. So it's like,
do you think the market
gives a
would
shit
crash
if the 1 month adjustment on the year over year is 0.1?
Do you think the market would crash if the Fed said by this date we will do whatever it takes to get inflation back to 2?
Yes.
Whatever it takes?
Yeah.
Whatever it takes.
By whatever date.
Yeah.
Like, let's say
SPX $500.
Let's say Jan 1, 2028 or 2027.
1870.
Right?
1880.
Bitch.
You think the S&P 500 would get to 1880?
That seems like a fair price.
Ooh. That's even low for me, and I think it's...
I mean, we're talking PEs go back to 10, bro.
No, not at 1880.
No.
It'd be like 10.
Listen, if an event occurs where PEs go from where they're at now to 10, we're going to like 4.
Okay.
let's be real. So yeah. I would say
18. everyone's just gonna get fucking wiped out.
Yeah, 80%.
No
okay,
so
going into this decision with a data dependent Fed, who I've talked I know we've talked about this for years. I know where we all fall on this. We all believe fervently they are completely data dependent. Right?
The Fed?
Yeah.
What data?
Right.
You're fucking trolling me so hard right now.
I am.
Okay.
There's
so
data
does
coming
any of
soon.
this data matter?
Phillips curve?
I mean, you're kind of talking. I know you already said earlier that the Fed's going to cut because they said they're going to cut and they're going to do what they're going to do.
I actually don't know if the Fed cuts. Whoa, hold on. We haven't gotten to that part of the night.
Oh, here we go.
I have a different opinion.
Let's get into this.
Oh, shit. All
Is
right.
this our stupid bet?
No.
We'll get into that later.
This just has to do with the way monetary policy is just handled, right? I mean, a monetary policy between all major like G7 countries is done, with some degree of communication between central banks. And if Japan is firm, and they are definitely going to hike, which they've been pretty clear about already, and they tend to announce that shit way in advance to avoid upsets in the FX markets. Then Powell doesn't have to cut. Like if Japan hikes, Powell kind of doesn't have to do shit.
But doesn't Japan decide
what's the reason
Powell?
for Powell cutting here? I mean, just because the market says he's gonna is not a good reason for him to do it. Or for any of the Fed. I mean, like we already know Moran's gonna vote for it.
But you say, but on the contrapositive, if the Fed cuts, Japan doesn't have to do anything.
No, Japan still has to hike because Japan's bonds aren't going to go down if the Fed cuts.
Do you think Jay Powell's talking with Ueda and trying to game this out?
Abso-fucking-lutely. Yeah, this is a multi-trillion-dollar problem. This is not a fucking joke. This is a big deal. If the spread collapses that much at once, remember the last time Japan hiked?
Do
the
you
Fed was
think
like, we're going to pause
okay.
for 6 months.
Is Moran still going on his tirade about cutting rates?
I mean, who gives a shit about him? He's just like, he's like noise, right?
Well, I get that, but if now that he's in the circle, he's in the game, he made it in, he's on the all-star roster.
Like a child?
I'm not saying he's going to dissent, but I'm just saying if he just shut his mouth, like he could still vote against it. It's like the people in Congress, like those you know, there's always like 6 of the prevailing party that want to vote the other way to keep their job with their constituents, but only 4 of them can, and so they have to like draw straws. So like he's already drawn a straw. He gets a free straw. He gets to vote however Trump wants. But if he starts to shut his mouth to try to like maybe silent, you know, just kind of like get away from his, you know, stop being so loud and so noticeable that he's.
So if he gets quiet,
that's what I'm interested in. Has Moran gotten quiet over the last?
Look up.
Yeah,
I don't know when he spoke last, but
it's something we'll have to look up off the stream. But I think that would be an interesting thing. Is Moran, because he went on quite the little circuit. He actually showed up on some of the FinTwit.
He did about 2 weeks ago. He called for exempting treasuries from the bank leverage rule. That's not foreshadowing, right?
Well, yeah, he's actually been talking about that a lot. That's part of like that Basel III endgame thing where we could go into that too another day. I think we probably don't have enough time, but if people are interested, we could talk about the fact that reserves are getting low and the Basel III requires that you cannot count your government treasuries as part of like ample reserves. You have to exclude those, which is a big problem for governments that are spending like crazy people.
Whoa. The U.S. is not one of them, right?
Of course not. We just have a president who's thinking out loud on the possibility of paying our debts in Bitcoin. That's not weird, right? That's not bad. That's normal. But I think, okay, does anybody have any last word they want to say on macro? Because holy shit, we went into it.
Yeah, we did. Yeah, we can blow through a lot of the rest of the stuff, though.
Today. I know. We always do. We love our macro.
We do. I mean, we get so few opportunities to really talk about it in depth nowadays. So
I know. We really do.
I do want to say one thing. I went to Costco this weekend and Kerrygold butter, which I've bought, I don't know, every 2 months for the last 3 years.
My wife loves Kerrygold butter.
Has doubled in price. It is now double what it was 4 weeks ago.
I noticed that at Walmart. Yeah.
PCE is definitely down. So
don't look at brands. Well, I thought it was great. I mean, it was nice to see that, hey, they're actually showing numbers where, you know, I don't know what they don't break it out in healthcare for the actual, like, you know, real PCE rate. But to say, you know, hey, consumers are spending 12% more. When you go and look at like UNH and all of these other earnings reports and they say, hey, we're raising prices 12%. You're like, how the fuck is healthcare costs only going up 4% a year or whatever, have gone down?
Have you seen that super depressing subreddit of people who've lost their ACA benefits? And their premiums
that started happening.
Their premiums.
I thought that was supposed to happen at the
because we're in the open
year.
We're in the open window right now for enrollment, and so everybody's getting their quotes, and everybody's fucking premiums are going up like 600%.
Oh, Jesus Christ!
Yeah. That and don't forget that student loans started back up again. The American consumer is doing great that. With everything up 200% or more in cost.
Well,
groceries are up,
my wife,
gas is up.
My wife's been paying her student loans for quite a while now.
Durables are unpurchasable.
So I just want to point out, though, the thing is that like what you're seeing there is, and this is interesting, I don't know necessarily, like, I think that, yeah, the ACA tax credits have to come back because people are going to get way too angry. But what we're seeing is just a transfer of who is paying for this healthcare. And now we're actually we're approaching real price discovery after the distortion in the cost of healthcare. It's an interesting thing. I mean, I think that, yeah. Okay,
so we remove subsidization, but here's the thing. Healthcare didn't get cheaper at the top end.
No, of course
it got more expensive too.
No, yeah, that's what I mean. But this all comes back to the whole thing where Obama didn't make it a single payer system.
Yeah. Well, I mean, there was
pretty much it.
There was definitely a lot of fighting, and like what we ended up getting was definitely not what was originally proposed. And that was never going to happen, right? Because too many people stand to profit off of the current system.
Yeah, no, that's exactly why. But now we're seeing, I think that just kind of lifted the veil on how much healthcare actually costs in this country, which should piss people off more than their premiums going up.
I'm going to say something really controversial, and I have a few friends that are going to be really offended by this, but maybe doctors shouldn't make $500,000 to $800,000 a year.
Because just remember that statement, Gherk, when you go under the knife. Okay, just remember that statement. When your anesthesiologist is like some bum with a beanie on, it's like, yeah, man, I graduated last week.
Have you been to like a medical school?
Love this high.
Okay, I'm sorry, but it's not like the best and brightest in this country are like, oh, you know what I can't wait to do? Squeeze people's warts. I mean, it's just not. I can't wait to unplug this impacted colon. Are you fucking kidding me? Like, I would never do that shit.
The best and the brightest do like heart surgery, brain surgery, like all the real challenging stuff that like makes them feel good about themselves.
Yeah, the rest of them get DOs and get C pluses.
Yeah, the rest of them they just have like foot fetishes and stuff.
Yeah, like I mean, the bar for like pediatrician is so low that nurses just do it now.
Well, so here's the thing, Gherk. So
I will say, to defend at least I will defend my pediatrician. He had to do a impromptu spinal tap on my newborn son to get spinal fluid.
Yeah.
And he did a great job. He let me sit in on it. It's always really funny when because I like want to sit in on them. They're always like, "Don't faint. You have to sit in this chair. You can't be standing."
They don't know you.
Yeah.
And you're like bending.
It was a perfect pull. It was measured, and he was just like he was like what's his face from Sleeping Beauty, just like thrusting the sword into the dragon's heart.
Except this is your newborn child's spinal cord.
Yeah. Could paralyze them, but So I just want to say that.
I mean, I'm not saying there aren't good doctors out there, but I'm saying the average, the mean, is not impressive. It's definitely not Europe, commanding that kind of salary.
In Europe, right? If you go into a place like basically the equivalent of like a CVS pharmacy, or in Mexico even too.
Yeah.
You go into one of those places and you're like, man, I got a wart. You know who walks up and helps you out is a medical doctor who works at the place, walks over and is like, what's going on?
Or like a pharmacologist?
No, like a literal doctor, like an actual fucking medical doctor, not a pharmacologist, like a MD guy.
Okay.
Walks up, he's like, oh yeah, I see you've got this. That looks like a chemical burn. You could probably use this to neutralize it and then you're good. But then they also act as a layer of interference for the actual hospitals, where if someone walks in, they're like, I've got a gunshot wound, they're like, you should go to the hospital. Like, but okay, so I
actually always
go
to CVS for my gunshot wounds.
As we all should. but I think
that minute clinic they can really stitch you up quick.
It's great. You get free med, but it was great. Like when I experienced that in Europe, when I had some digestive issues, it was like an actual doctor was like, yeah, get this shit. But like, I think there's some merit to the idea that there should be some just okay doctors, and they should be working at places like the fucking CVS. So that way we don't have hospitals that are just filled to the brim with people who have all kinds of medical issues.
But also not paid $500,000. I mean, not
no. They should be paid.
They
should just be paid a median wage and be chilling. But like the fact that we have this weird dichotomy of like, oh, if I'm gonna be a doctor, I'm gonna be Doctor Fucking House, or or I'm running just. Hopefully, I get a family practice that doesn't go bankrupt in 5 years. Like,
that's because they don't teach doctors to run businesses in medical school. But anyway.
I haven't turned the MC back. I haven't turned the MC over to Dork yet for the latter half of this. So I have to get everybody back on track before Ron blows his brains out on video.
He's got the gun to his head right now.
Yeah,
put it down,
guys.
Ron.
You gotta move this shit along.
I don't know why Ron doesn't just take a nap while we talk.
Earnings, any earnings that you care about. There's a couple interesting ones. I noticed Campbell's. They should do.
I know you're very attached to that one.
They should do great. Feeding slop to poor people.
AutoZone is interesting.
AutoZone will be interesting, yeah. To see if people are fixing their own cars. That's a big one.
Someone we talked about a little earlier is on this list.
AutoZone will be interesting for the tariff perspective too, because a lot of people working on their own cars are buying shit from people who export the shit to America. So I'm interested to see what their margins are like.
Well, you also can't work on a car
we talked about earlier. Wait,
Synopsis?
Oh,
Lovesac.
I was going to say I was talking about something else. I didn't.
Oh, I mean earlier on the stream.
Oh, never mind.
Not that conversation.
It's fine.
Yeah, so Synopsys, Adobe, and Oracle, kind of like the AI NVIDIA sort of weird ecosystem. I will say
this week also.
I was trying to upscale some images back with our image resolution gate. When we're like, all the images are too low resolution, we need, we need each picture to be the size of a billboard. And I was like, what if I take the existing image and I go into Adobe Photoshop and use their Firefly AI upscaler to upscale the image?
How'd that work out?
It did not go well.
Yeah.
I burned through my tokens, which apparently I didn't even know I got tokens. You get free tokens with your subscription. Burned through those tokens, and it did what you would expect AI to do. It took because our images have a lot of text and things on them, like dates and ticker names and gamma and all these, and it just garbled them. It made them gobbledygook like AI would do.
Yeah.
And I was like, how is this an upscale? It made it a bigger resolution, but it was significantly worse than me just going to image size and doubling it.
You know what you should have done, JFresh, is you should have used a picture of a puppy instead, or a picture of a blonde, blue-eyed woman. It probably would have done a better job.
New favorite thing,
a hot dog.
My new favorite thing is like online where they ask image generators to recreate the same image with no changes, and then they do it like 50 times. And it just keeps making completely different images every time.
Yeah, if you're able to get to like 1,000, it actually just generates a penis. And if you get to 2,000, the penis turns into Scott Bessent on his soybean farm.
Dude, I gotta try that.
So I mean, we do have some really important information this week on the consumer side. We have Campbell's soup, which will tell us are poor people eating soup. And
AutoZone,
we have AutoZone telling us whether or not people are fixing their own cars. We have GameStop telling us nothing. And then
how much is Bitcoin worth?
It's a Bitcoin treasury, right?
Strategic, sort of. Yeah, I mean, he bought it at a price far higher than it is now. But he took a picture with Michael Saylor, so he had to spend $1 billion on Bitcoin.
The game must stop.
And then we have Chewy. Are people still spending money on their pets? And then lastly, Costco. Are people still blowing their whole paycheck at Costco? Probably not.
Yes.
I mean, Costco's at what, 55x forward earnings? We are getting into the holidays, but this isn't reporting that period. And so Costco may not be so great. Broadcom, I mean, definitely, and Oracle, probably a little bit of problems with their CapEx stuff. I guess we're going to hear a little bit more about Google's Tensor shit, right? Is that not a big deal? I mean,
well, we did talk.
like...
So I'll update you a little bit. So we did talk about this last week. That it's not necessarily the NVIDIA killer, but it did show up recently because Anthropic notably made an agreement with NVIDIA to go and use their chips. I think it was as recent as last week, if not a few weeks ago. And that was significant because they've been avoiding NVIDIA because they have some like weird little feud or something. I'm not really sure what all's going through Dario's mind other than mental illness. But they are now, I guess, inking an agreement, whatever. It's probably a non-binding agreement like all the other fucking agreements.
Yeah, bullshit.
But they are signing some sort of agreement with Google for TPUs.
Interesting. I mean, I still think
it's still for way more money than they could actually
spend or afford
find in the next like 3 years. But it's not quite as egregious as OpenAI. But
I don't know. I feel like OpenAI is going to be really well positioned with their $30 billion in revenue to pay off their $1.2 trillion in debt that they accrue.
The biggest thing,
$30 billion. I'm sorry, falling revenue.
Can I just say what I think is the most bearish indicator that I've seen so far this year for next year? Anthropic is contemplating a 2026 IPO.
Oh, I thought you were saying, you were going to say Anthropic has opened up porn on Claude.
No, that would be bullish.
Be bullish as fuck.
Well, because I was actually, when OpenAI was obviously they've had a bunch of trouble and they actually, I guess they're about to be or might be sued for their conversion that they made to whatever the fuck they are now, some sort of quasi public good public company. I don't know, but they might. I think they're in the process of being sued for that because they are not.
Yeah.
So there are other extenuating circumstances for why they might be hesitant to go full IPO while they're still working through all of that legal stuff. But it's really interesting to me that Anthropic is announcing and talking about potentially IPOing next year, which means that the money is probably drying up hard for them. They don't have another SoftBank to give them another potential year of runway. And so it sounds like people are starting to be like, go get your money somewhere else. And who could they give it to? Who could they get money from? All the stupid public investors. Yeah.
Boomers.
So I was interested in that. It seems like in a lot of different, in 100 little ways, credit and money is tightening. People are getting apprehensive. They're not just dumping money into these companies like they were 2 years ago. Anyway, anybody want a final word on earnings?
No, I'm just interested to see how AutoZone does. That's about it. I think that the earnings for Oracle and I'm not expecting a lot, but maybe Gherk can dig in enough for me to receive that info from him because
you'll receive it.
He is artistic enough.
I like the way you put that.
Severe artism.
Yeah. I don't know what you're talking about. I've been diagnosed with nothing.
As far as the scanner,
never gone to a doctor.
Shut up.
As far as the calendar goes,
they don't have them at CVS.
I think the only thing on the calendar worth talking about that we haven't talked about already, being the Fed decision on Wednesday, is double jolts.
Yeah, BLS is hooking the car battery up to both testicles this week. We're getting September and October on the same day. And I really hope, because I'm a sick fuck, that they're drastically different numbers. Like I want them to be 6 million jobs apart. And that will be the happiest day of my life.
And that's on Tuesday. So that's potential volatility ahead of that meeting.
Like I want September to come in at 7.1 million. And then I want October to come in at like 4.1.
The Fed hurt itself in its confusion.
But here's the thing, Gherk, is they always only post the expected value. They don't post the variance. I think if every place that posted these numbers posted the variation as well as the expected value, people might care more. But yeah, I mean, the volatility in all of this data has definitely gone up.
The JOLTS is just a volatile print anyway, and no one's ever right about it.
Yeah. So it's like when you're always up in arms about like the Philly ISM and all this other weird shit that nobody's ever cared about.
I know.
You're always like, this is the Philly ISM that's going to be the one. Do we have a Philly ISM this week? We probably do.
You mean the Philly Fed report, like the regional one? I don't think so.
I'm just giving you shit. But it would be really funny.
I do get hung up on weird macro data points. Sometimes they matter a lot. And everyone just ignores them. That's not
even the main ones don't matter.
It matters when they surprise.
Does it?
Yeah.
Here we are.
Have we gotten any surprising data? I mean, I thought it was all fixed at this point.
I don't know. Anybody
like
want a last word?
5% unemployment forever.
Anybody want a last word on the calendar before we move into Ron's thing? Because Ron's important too. He's got to feel important too.
No, Ron let him do his thing. He's been awake this whole time. So
all right, Ron, wake up, gun down. Play your shit.
Do options Greeks just sound like Greek to you? Check out our free learning materials at app.gammastrike.com/docs to get a better understanding of how to understand market maker behavior.
Oh my God, is it over?
Yeah, I think it is.
Fuck me. Okay, good.
Jesus Christ.
Fucking just makes me want to go to bed every time.
Ron, do you have anything on our socials? Should we plug our social accounts we're trying to get online, get up and going? We got X. Apparently, one person is on Blue Sky talking to us there.
That's cool.
But he's also on all the other platforms, so who cares? We got Reddit, r/Volstars, r/GammaStrike. Discord coming up soon, probably. Anything else?
I think you just nailed it.
YouTube. We post the videos on YouTube. Anyway,
Spotify.
We're always around. We're always doing shit. Love questions, interaction. We'll give you way more time than you deserve and that we can afford to give you. But again, we all have mental illness, so give it a shot. Love to talk. All right, you're up, Dork. Take us home.
It's my turn. All right. Well, to kick things off, just remember, you could submit a question to us. We post before every Volstars sesh with, we're going to do Volstars. Put your questions here. We also have a forum. You could throw your questions there.
Where do we post those? Where do we post that thing for people to...
Well, we got it on our socials, everything like that. It's already posted on the video. It's in our description, everything like that. So you just, Reddit too. Wherever you want to do it. I mean, you could even just go on to Reddit or X and tag us or whatever and just ask us a good goddamn question.
Yeah.
And if anything, we might just get back to you right there. We might just, respond and say, that's a great question. We're going to put it on Volstars. And then there you go.
I mean,
we
are trying to get back into Reddit. I mean, Reddit's a mean place. People are mean there, but we're going to get back in. Because
they really are mean.
They're just hateful. They're full of spite and anger.
Well, they just want to be right so badly that they'll be spiteful to be right. It's crazy. Anyways, questions. So you ask your questions. We got it in the description, all that fun stuff. First question from X. How do we interpret the options macro data?
Say his name. Make him feel special. Or her.
All right, Cosmic Gant from X. He asked this.
We're doing little shout outs now.
I guess we're doing shout outs. It's great. Yeah. Okay. So how do you interpret the macro data?
This is JFresh's thing. I'll let him talk.
Oh yeah,
yeah.
totally.
This is my baby. This is just me trying to get a handle on the market as a whole. So the first thing to consider is what this is doing is basically taking what is the value of all the contracts on the market, whether it be the contract value itself or the delta that it represents, which might represent hedging on the market. And it just aggregates it historically. And so it kind of gives you a sense of just, I mean, the very basic thing, you can go and look at our historical data, which goes back to 2017, and just see like how big is this market? How important is it? How much could it potentially impact markets? So the first thing to keep in mind is that right now the total delta on the market is, around $6.5 trillion. And you're talking about a total market size on the order of 10 times that. So 1/10 of it, and it's leveraged and it's dynamically hedged. That is a huge position on the market. So that alone, just right there, just gives you a sense of how important are options for, the larger moves in the market. But then you can kind of dig in, you can look at, for example, how risk averse or how, what's the risk appetite of people who are in these markets. And so, for example, with like the OI contract value, you can see, and this was something, the other day we were talking, kind of made the comment that I don't think we've really had a crash since 2000 and well, really 2000 was the last time we had a crash. But what I would describe the quote unquote crashes that have occurred since then is really just more of a volatility event. And the reason that I wouldn't call it a crash is because the market didn't dramatically delever. Oh, I'll say 2008, there was a deleverage, but then the Fed stepped in and levered up in the absence of private leverage. So, and that one's a little bit tricky. But if you look at all of the crashes since then, all it does is just transition value from calls to puts. Nobody's closing anything. It's just the value shifts, right? And then when it recovers, it pops right back. And so you have these really fast recoveries from, what used to be when a crash happened, like that was a regime change. It was a wake up call. Everybody got a hangover. Now it's just like everybody buys the dip and nobody actually delevers anything. And so these aren't really crashes in the conventional sense. They're just volatility events that unwind. And that's what this helps you see, right? You can kind of see like, oh, in 2020, actually 2020 was an interesting one. I think it caught a lot of people off sides, but um, the value of contracts actually just went way up. It didn't go down. But then you look at, like, for example, the crash this year from the tariff tantrum, almost no delevering at all. It was basically flat. I mean, there's a lot of volatility in it, but it was basically flat, like around 700 billion or so.
Which should be scary for anyone thinking that a 26% drop isn't enough to force any actual deleveraging.
Yeah, right. But that's kind of what occurred. But you can look at these kinds of things and see, hey, over longer time frames, you can look from usually, for example, the June OPEX, that's usually a significant halfway between the leaps, usually a significant drop off during the year. But you can see, like, since that point, like the net contract value has just rocketed higher. And of course that this matches with rising prices, because the more interest you have, generally the higher prices that you get. And then you can see that recently we had that drop, and we're still kind of like just trying to get back into that original trend line. So we are in a moment of weakness and trepidation, I think. So those are kinds of things that you can get from that macro view. And I always start when I looking here to kind of get a sense of how does the market as a whole feel before I start diving into more specific things. And then if you scroll down, so you can get a sense of how that will change with moneyness on the next range. That one's a little bit more complicated, and I would encourage you to kind of reach out or maybe formulate your own theories and see. Send them to me or post them somewhere, follow up questions, and see how I would evaluate that theory. I think that would be more constructive than just me rambling about it. But this basically just kind of tells you how those positions might change with spot price. And then at the bottom, it kind of gives you a sense of like, where is all the leverage or where is all the interest? So like, the delta to market cap, XRT is always high because it's always heavily shorted, right? So, there's more delta on the XRT chain, which is a retail stock chain, than the actual assets under management of that ETF. And that actually 1.2, 1.3-ish, where it's at now, is low. Usually it's like 2 to 6. Like if it's at risk of like a short squeeze in the short term, it's usually closer to like a 6. But then you have things like SPX, the
SPXS.
options. Sorry, thank you. The very important SPXS, the short version. The options on it are larger than the assets under management. Wolf has been there for a while. I'm not sure what Wolf is. I haven't really dug into it, but it's been notable for quite some time, and it's very put heavy. Cree has been on this list for months now, and I think that's extremely interesting, right? Looking at smaller banks, things like that. UVXY, who knows? IWM's been up there, which is also interesting, although that's kind of related to XRT. Silver's there. Netflix is there, which is actually fascinating. QQQ?
SQQQ.
Okay. No. QQQ is
Delta?
like... No. QQQ is like number...
Yeah.
Okay. So what this is saying is that
14?
almost 40% of assets under management of QQQ is options interest. Potentially. That's crazy to me. Okay. So there's a lot of things here that I need to dig more into but that's what this is showing you is how relevant are options for a given thing, right? And then you can just look at total delta. And this was actually something I think that we posted on X or somewhere.
Yeah, about one of the stocks on there.
Today, right? UNH?
Yeah.
UNH popped up as one of the top 20 stocks by delta on the entire options market, which is notable. It's not usually up there. I think it was up there a while back when it like plummeted, but
when Mangione killed the CEO.
But again, this is just to kind of show you like where are people putting most of their money, right? Like it's like it's usually SPY, QQQ, NVIDIA, Tesla. Like those are like the top 4. Gold isn't normally up here, but it's been up here for quite some time, and gold has been very volatile, and there's been a lot of interest. So this kind of shows you like where is the interest? Where are people interested? Because they're putting their money there. And so then the one other piece, the delta over days to expiry, DTE, it just kind of shows you where they're putting their money in time, right? And so a lot of the money right now is placed on single stock option leaps, right? The December expiry, and actually December end of month. So December 31st is a very big expiration as well. So those are some of the insights that I get from myself from the options macro, but there's a lot of data here that you can glean from it. And that wasn't exhaustive, even though it might have sounded exhausting, but I'll end the response there so we can move on.
Yeah, we also have docs on this too. So app.gammastrike.com/docs. You get more information on it. You get more information on everything we offer at app.gammastrike.com/docs. So yeah, let's move on to the next question. McGurk from X. Has Michael Burry fully backed into degen mode?
It would appear that way. Yeah, he's I mean, in a very Burry-esque way, he has abandoned his fund, where he had to answer to investors, and apparently is still short everything. Just with his
Can
own
I just
money.
say, I just want to say, because I think this is very appropriate and timely for this question. He is currently on X asking for anybody with knowledge of the matter to send him pictures of warehouses full of NVIDIA chips.
I need sources familiar with the matter here. All right, guys, let's go.
He's looking for the chips.
Interesting.
And you know what? Good for him, because I want to know where those chips are, because I still don't believe the H20 exists. It does not exist. That motherfucker is not real.
Nice. Okay.
So yes,
okay,
full degen.
Okay. We got a question from Google Forms. Can one of us please do a totally serious TA on CS2 cases, maybe on the April the 1st? Thanks. CS2 cases, I have to imagine, refers to CounterStrike. And I believe when we vetted this
General
question,
Store.
No, yeah, but that's no one cares about that. So
I mean, it's gone up like 100% in 2 years.
You're 100% in 2 years.
Thank you.
So we went ahead and did some
TA
on some CounterStrike cases, I believe.
In preparation.
Do you have?
I actually, and now, please keep in mind that it can be quite difficult to.
Can I ask a stupid question?
Yes.
What the fuck is a CS2 case?
So like like those boxes you get on subscription, you don't know what's in them, or a Pokemon card deck. It's kind of like that. Yeah, it's a loot box. So it's basically gambling for kids.
So I found this really qualified source for CSGO case data, called csgostocks.de. And clearly this is the source for candlestick charts on CSGO cases. And I took a look at the Spectrum 2 case and Prisma 2 case back until 2021. Let me just adjust this here. And I can say they're both following fairly similar distribution trends, where they've likely realized peak valuation and are now beginning to decline and find a new level where they will attract willing buyers. Sometimes in markets you can use Wyckoff theory to define this. Without any institutional speculators in this market, I would imagine that the peaks and troughs are a little bit more volatile, but it does look a little bit distributive over the last year. Which, if people are gambling less on what is effectively Steam money, so they're exchanging real world money for Steam money, kind of like Bitcoin, but harder to get your real money back.
Impossible.
That may say something about the consumer globally, as this is far more popular form of gambling in other countries.
I hate everything about this, but I'm also intrigued.
No, this is
every time you Wyckoff in front of us, is the thing that you're Wyckoffing about rips.
That's not true.
Yeah.
Only if
I know.
Every time I've said
something in front of us
was distributive, it went down. Remember when I said Bitcoin was in a Wyckoff and then it went down to like $13,000?
And then it went up.
That's not the point. The point was the down part.
Okay, the down.
Yeah, I think this is exactly what they were after. So yeah, so this distributive, cool. It is interesting though, the fact that there are candlestick charts for loot boxes. I never thought that would actually exist, actual candlesticks, but I never cease to be amazed.
Here they are.
Pretty cool.
This person just got more than they ever could have possibly hoped. So great.
Yeah. Okay, moving on. Tobogganeer on Reddit goes, quantitative easing, money go burr. I mean, we kind of touched on this.
Not yet.
Yeah.
Actually,
I think they're going to give it one more try, but
I know you guys want to blow through this, and I agree with you. But
who's you, Ron?
You know,
you agree with Ron?
No, not Ron. You're the one who's about to say
Colloquial
they're gonna give it one more go.
Yeah, but shit's gonna have to get a lot darker than it is now before they do it.
You think so?
Yeah.
I feel like the Fed has never been that thoughtful about any of their actions. I feel like banks are going, cash is expensive, and then the Fed's gonna go, it's okay, we'll buy the short end.
Yeah.
And then banks will be like, yay. But here's a problem with that. By doing that, and especially implementing it improperly at this point, they can preserve reserves. But I think there's going to be a big reaction on the long end if the Fed steps in and starts doing QE right now. And how they do QE is very important. If you think about historical precedent
when you say
for
reaction
doing
on
QE,
the long end, hold on. When you say reaction on the long end, do you mean up or down?
Up.
And why?
I think yields move up.
During QE?
Yeah, at the long end.
Well, no. Okay, but if QE involves buying mortgage-backed securities, long end's going to stay flat.
Okay, sure. Yeah, if they, I don't know if they're going to go that balls to the wall with it.
Well, so the question involves money printer go burr, and money printer go burr necessarily implies that mortgage-backed securities are purchased, right?
Mm-hmm.
Not necessarily.
I mean, they're going to swap collateral for reserves. So they're going to secure front end rates. So SOFR and like and like the standing repo rates are going to like calm down. But dealers want collateral to run their books. I mean, large scale buying of treasuries by the Fed's going to over tighten the collateral side, without a doubt.
The Fed buying the front end seems insane to me. Like, why would you buy all the risk-free shit?
Well,
there's no risk
because there's no money.
Because have you seen
there's
the SOFR
more money
spread?
than any we've ever? There's more money than people know what to do with.
No, that money's all tied up in random bullshit like paying for a bunch of H20s that totally exist.
Well, okay, that seems like their problem, not mine.
It'll just drive.
It is your problem by proxy.
Up.
Okay, look.
I know.
If I owe the bank,
would like to abolish the Fed.
If I owe the bank $100, that's my problem. If I owe the bank $1 million, that's the bank's problem. If I owe the bank $100 billion, that's the rest of the country's problem.
Yeah, everybody's heard that a million times. It's like me telling my kids, man who goes to bed with itchy butt, wake up with stinky finger.
But my addendum was pretty interesting, though.
Yes, I do think money printer will go burr, but not yet. Well, not inside, not in like meaningful sides. They might try to like ease into it or try to gaslight us and tell us they're not quite doing it yet when they are kind of doing it. And
well, they are kind of doing it a little with the rollover.
Well, they never stopped buying the long end, actually.
That's true,
They've been buying the long end the entire time. Fun fact, go look up.
Just replacement, right? It's just replacement of
they've been adding. It's been going up. It has never gone down. Ever.
I mean, I don't know.
Yeah, well, but the Fed they'll start with just the tip and they'll see how we like it.
And then they'll go for full burr once everything kind of starts getting a little weird.
QE is very dangerous in a fragile system because you increase the systematic fragility of the system, right? And so, if you start dumping reserves into a system with like a tight front end and a lot of treasury supply, you get a wave of like levered UST, like cash futures basis trades. You'll get a lot of MBS carry. You get, credit RV funded in repo. And so you get like even more gross leverage on top of like what is already clearly a fragile like funding structure. And so
I have a question.
What's up?
Do you think Stephen Moran has ever gone into a bar and walked up to a woman and said, "I'd like to dump ample reserves into your tight front end"?
No.
God damn it, JFresh.
Anyway.
Look, Gherk, you just have to remember there is no alternative. So no matter what, ultimately they're going to print. They're going to try to print their way out of this until it doesn't.
I
work.
mean, the alternative is not to do it. That's the alternative.
Yeah. The alternative is to actually lose elections, which is not going to happen.
Yeah, politically it's unsustainable, but I mean, the Fed is not influenced by politics for that reason, supposedly. You know.
I think that the Fed is irrelevant, and I think that no matter what, in pursuit of not losing elections, we're going to print our way out of this. But moving on to the next question, we got a question from me too. Why don't we're already at an hour 41. Holy fuck. Okay. Yeah, last question, because otherwise Ron, he's got the gun again. So
don't ask that first one. That's garbage. That's a garbage question.
I was gonna I think that the best question
to the third
is
one.
The third one?
Yeah.
Okay. Well then, for people who put flavored coffee creamer in espresso, should they be reported to ICE?
I'm American. I don't know what you want me to say.
I mean, I've reported JFresh to ICE like 5 or 6 times because I was trying to free up some equity.
Oh, you
and
too?
So far, he's still at home. Yeah.
Wow. I thought I was the only one.
Yeah, I said there's this
Irish
leprechaun.
An Irish immigrant.
Yeah.
It's not flavored coffee.
He hasn't paid
creamer.
His parking ticket.
I was like, don't be fooled.
Flavored coffee cream. It's actual cream.
And
it's fine.
Why do you need? Why not just put nothing in your coffee? Like
why don't you just steam it?
Why not just drink what you like a man?
That's why I drink black coffee.
Just like his man.
Exactly. Strong and black.
All right.
Okay. Well, with that in mind,
so we're gonna have to ban Nitu from asking questions.
I mean, I don't care about Oracle's debt, and then the volatility forecast for 2026 higher than it is now.
Be higher, but probably also lower sometimes.
Yeah,
and then also a lot higher, but mostly just maybe a little higher. But
are you trying to say dispersion is cyclical in some way?
No way. Okay. So, do we have anything to report on the GammaStrike side? Do we have some new stuff coming out? Anything going on? What's going on there? I think we do have some new stuff.
Do we need one more week to let it brew, or do we just?
I think we let it simmer for a bit. So, in the very near future, we are going to be releasing our new real-time data feature. It's got some new fancy things in it. We talked about it last episode, the episode before. It's going out to the public. Beta users have been using it, and they have not complained at all, so no notes is a good thing. So we're going to release it, and when we do, we'll also have an accompanying town hall. So if you see it pop up, go ahead and give it a try. And if you love it or you hate it, tell us in the town hall. Please, we love negative feedback. It's the best thing ever. And we're chewing on the idea of a trade of the week.
Ooh.
So, yeah. So, whole idea is, you make a cool trade using some GammaStrike stuff and you feel like sharing it. Just tag us and be like, this was cool and I used this data. And
I highly suggest tracking said trade and the data used to determine that trade.
Yeah. Give us a
maybe drawing it with paint.
Yeah,
stick figures,
just like,
a little penis.
If
you're
just if you just show me an options position that's up, no.
Yeah, that's bullshit. No way. No, you gotta do with crayon and the arrow, and then you're like, I did this thing. Yeah, that'd be great.
Actually, if you print out the screenshots of GammaStrike and then annotate with a crayon, bonus points.
And then take a photo with a Polaroid camera.
No. Rescan it up to your computer, then take a photo of that scan on your monitor with your phone.
Yeah, so
then upload
the
it
weird
to Twitter.
wire patterns. Yeah, exactly.
No, just upload the idea to your Twitter, before it happens, and then
I don't know. Yeah, just something. Just a little bit of a paper trail. It says, yeah, I did this trade. I saw this thing, and it was cool.
Well, it could be
then
fun too.
if
It could be forward looking or just reverse looking. Like, here's the
whatever
trade I made and how I made it. But it could
Yeah,
also
and
just be here's what I'm thinking, right? Those could be interesting points of discussion at least.
Yeah. I use something like that. And if we love it enough, then perhaps if we ever find them, we may actually potentially, now this is highly speculative, but we might actually send you a GammaStrike hat. Maybe.
Not before I get my hat.
Fucking goddamn right, JFresh.
Literally I will ape my desk over. And I have a double desk. It's like 6 feet long. It's got 2 chairs. It's got a printer in the middle. I will ape that shit 180 degrees vertical.
You gonna get a hand truck and like just lever it over?
No, I'm gonna blow out my back. I'm gonna be in bed for like 3 days afterwards.
So yeah, there's some new stuff. It's pretty cool. So yeah, trade of the week. It's an idea we have. If we see some activity on that and we see some stuff interesting, yeah, be more than happy to feature it because we see cool stuff all the time in Gherk's Discord where people are using it for all kinds of fun shit. But every once in a while someone has something that's totally just out there and we're like, that's so cool. They managed to yank that out. So feel free if you find one to shoot it at us. But I think with that, it's time to move on to everybody's favorite. Stupid bets, stupid bets. Who's going to win? Who's going to lose?
All right. We had the stupidest bet last week, right, Dork?
It was so stupid that no one
didn't
wins.
Even start until this week.
Yeah.
So we have this lingering bet that's now going to persist for another 2 weeks. So we have to come up with something.
That's fine.
So what are we going to bet this week that actually happens this week?
I want to bet that Costco is not worth 55 times its forward earnings. Okay, fine.
Does anybody disagree with that?
Wait,
I mean, I love Costco. I love Costco more than
Costco
probably
loves
the average
you.
person.
Okay, wait. I have a good one. Okay. We do meet, beat, miss, and we do it on Dave and Buster's.
Ew.
I haven't been to a Dave & Buster's in probably
I don't hang
20
out in
years.
places where people
You guys are
get drunk
so
with their
disconnected
children.
from reality that I would love this bet because I want to see what you guys think of actual people who play video games.
I would argue anybody that goes to a Dave & Buster's in 2025 is more disconnected from reality than anyone ever has been.
Who wants to get drunk with children present?
And spend more money on game credits than on alcohol? It doesn't make any sense.
Me, I don't ever want to be drunk and around
I didn't
children.
enjoy it when I went there 20 years ago.
Damn. Okay,
What's the
fine.
draw? Yeah, I don't know.
Okay, well, that sounds like you guys have some strong opinions.
Sounds like you
this.
go to Dave and Buster's, Dork.
When's the last time you went to a Dave and Buster's?
There isn't one in Reno. I don't know. I was a kid.
Oh, okay.
See? Even you haven't been there in like 20 years and you're like 20 years old.
How are they still in
You
business?
went there as an infant? You're like, your mom shat you out and took you to a Dave and Buster's?
Yeah, just latched to her tit. She's like, grab the joystick, move it.
Got you a $100 game card, which lasted 19 minutes.
Yeah, did you get
fine.
And then you bought
tickets
some
to
microwave
trade in for
cheese sticks and you went home sad.
for Temu crap.
I used the little droppy claw to grab a piece of shit, little fucking fluffy. Okay, fine. If not Dave and Buster, then how about Cracker Barrel?
Cracker Barrel's had a lot of controversy this year.
Yeah. Yeah, they almost changed their logo to something stupid.
I've never been inside a Cracker Barrel in my life.
I have.
Oh yeah? What's
They
it
serve
like?
breakfast. It's
Denny's?
It's like a Denny's with wood paneling.
Yeah, it's more like Black Bear Diner. You ever been to Black Bear Diner?
Yeah.
It's kind of like that.
Okay.
Have you ever gotten like a breakfast platter where you like it's impossible to fuck up and you're just like somehow this
Taste right?
It just seems under seasoned.
Yeah.
That's Cracker Barrel.
So they make food for geriatrics in the Midwest.
Yes.
Okay.
Correct.
I can do analysis on that.
Or do we do Meat Beat Miss on a company other people care about?
Oracle?
Yeah, I was about to say Oracle.
Or Broadcom.
Or Costco.
I feel like
or
Broadcom.
No. That's absurd. Let's do Casey's.
Oh, yes. Everyone cares about that stock.
Yeah, all 14 people that shop only at the local Casey's in their hometown.
How many of us have actually been in a Casey's?
I have. Twice.
Why were you in a Casey's?
I was driving on I-80 and it was there.
Okay.
Like a beacon in the middle of cornfields.
Wait, I have an actual challenging
like
one.
a moth to the flames.
Yeah.
I have a challenging Meat Beat Miss, okay? AutoZone.
No, that's
Meat Beat
again,
Miss.
now you've gone like the actual economic indicator, like a bellwether.
Yeah.
Should we just compromise
Test your might.
and just do Lovesac?
You know what I'm gonna go with? I'm gonna go with Chewy.
Baby,
Because a lot of people are like, oh my God, I love my pets so much and spend anything on my pets.
Okay, yeah, let's go Chewy.
But then I think when push comes to shove and it's a choice between your pets and your rent, you might pick your rent.
Let's go Chewy then. Let's do it.
I like that. My wife's a veterinarian. I have the insider information.
I think
You mean
Chewy
bias.
Miss.
Oh, shit. Okay. Gherk says Chewy Miss. JFresh, you want to go or you want me to go?
He wanted to pick Miss.
I'll let you go.
All right. I'm going to pick Beat.
I was going to pick Beat, so I guess I'll pick Meat.
Let's do it. MEAT meat?
Yeah, extra meat, extra meaty. All the Campbell's soup meat that they can't sell anymore because the poor people can't afford it. You're going to give it to dogs.
The Campbell's soup is now fucking dog chow.
Yeah. Campbell's chow. Chowder.
Wait, hold on. I thought Chef Boyardee was owned by someone else.
God damn it.
I haven't noticed a drop off in my wife's bonuses. She's a veterinarian, so I think it'll be fine.
Well, there you go.
Do you get... Oh, interesting. I didn't know there was a kickback system in place.
It's commission based.
Well, shit. She better sell more Chewy. I gotta win this bet.
She doesn't sell dog food.
This is cheap.
Yes, she does. It's medicinal dog food, okay?
She can suggest it, but she's not going to sell it. Yeah.
My vet sells everything, like right there in the office. And it's all at a 400% markup. And because it's New York City, people just buy it.
Gherk, I cannot stress how much you need to start going to a real fucking doctor.
God damn it. Okay, with that, apparently we have an outro.
That was great.
Send us out.
Thank you for listening to VolStars, a GammaStrike production. Please be sure to subscribe and check out our website at app.gammastrike.com.